Hi everyone, this is Brian Neal with TradeToBeFree.com. Wanted to give everyone a market update here. I'm going to show you some of the charts of the major market indices and the small caps and so forth, and kind of go over the trends that are in place right now. But first, before I do that, I want to talk a little bit about why we stayed more on the bullish side as we were coming down hard in late December, in the sense that we had more longs and shorts in the newsletter. We had quite a few really good setups that emerged, including Trade Desk, as the market was starting to first rebound off this low here. And I want to share with you why we stayed long at that point. We're a little nervous about this trend breaking and continuing to break, but once we saw it rebound strongly off this area here and then make a pullback here and start breaking the prior high, that's a trend change back to the upside, and that allowed us to continue to stay more on the bullish side and continue to have those long setups in the alert service. And I want to show you why that is, why we continue to have a lot of long setups in the alert service. And the reason for that is that if you look back at the Nasdaq over the past about 10 or 11 years here, it looks like, you'll notice that the Nasdaq has this very well-defined uptrend support. And a lot of people weren't talking about this. I didn't see this in too many places online or on TV or any analysts that I was watching. But if you draw a trend line to this, you can see that the lows through here will line up. And as it came down to test that, sometimes you go a little bit below that, especially around the holidays or the summer, or if you just have lower volume and fewer buyers because of people are on vacation, people are just not as many buyers are not around to pick up these pullbacks here. But as soon as we saw that hit that trend line and start rebounding strongly, we knew that we had a good chance of continuing that rebound and continuing this long-term uptrend support. So if you have this kind of real strong ingrained uptrend that's lasting for years, not for months, not for a year or two, but for years like this tends to be a pretty strong support. Okay, and that's one of the factors we looked at to remain long and still have a lot of really good long setups in the daily alert here and weekly alert. You can see we had Trade Desk just before the beginning of the year in an explosive bottoming pattern. This is, I believe, ABMD. I believe that was a bullish inverted J pattern. ServiceNow and Trade Desk again, and a lot of other stocks here that really exploded to the upside out of very bullish patterns. And, during that time when things looked really bearish and a lot of people were really nervous, that is a more, tricky time to trade the market, because usually you get a lot more volatility through there, okay? But when you see that long-term uptrend support being tested and you see the price move strongly off that with a strong rebound starting, that's actually a bullish sign, and one thing you can look at to decide whether you want to remain bullish and whether you want to entertain some trades or not. So I just wanted to share that with you, and maybe next time we'll get another test of that uptrend support, and we'll have another good opportunity like that in the future. We still had plenty of really good trading setups throughout here through the past few months. One of the biggest ones over the past month or two was eHealth, which broke out of a real nice symmetrical triangle pattern, and we've got some more information on that on the blog about how to trade that, and that's really good to look at to understand on how to identify that pattern so you can look for that in your own trading. But I want to get back to the here and now and kind of look at this Nasdaq here. This is a weekly chart over the past few years. Let's switch over now to a daily chart, and we can see that we're just now seeing this 200-day moving average and 150-day moving average start to curl upward. Okay, so we had this real long consolidation that lasted for about a year and a half, and now we're finally getting above that consolidation, and we're starting to hold above there a lot better. So that's a bullish sign. Now the negative sign with all this is that earnings estimates are still trending lower, and the way it looks right now, it looks like we'll have a negative earnings year. So earnings growth will likely be negative at this point. I heard someone talking about today, some commentary today about how earnings are doing better than expected and how we're going to see earnings growth and things are wonderful in that sense, are good in that sense, but really the estimates are still lower, still trending lower, and that's not a good sign. And in August, we may see some more earnings cuts, estimate cuts, lower than that. So we may see this Nasdaq start curling over. We can already see this sort of rounding action here, and what we may see is that come back around, maybe go back to that 50-day moving average, maybe a little below that, and then see a rebound off there. And that'll be key if we can get if we can come back and maintain above this long consolidation here. That would be a bullish sign, and that's what we're looking for. But until then, I expect the market to be tricky. It normally is. It normally is in late July and early August. That's usually when we see a pullback, and we normally see some lower win rates on many of our trading opportunities, the strategies that we use. However, the earnings eruptions trading setup right now is working pretty well. I'm surprised, and a lot of these I've noticed are in certain technology areas, and also in housing stocks. And I'm just seeing another one here. This is D.R. Horton. Now it's just before the Fed meets tomorrow and decides on rates. It's a big meeting and a big decision on rates. And we may see D.R. Horton breaking into new highs. We saw MHO, I believe it was MHO. Let me bring that up. There's a couple of these housing stocks last week that reported, and they reported very good numbers. And if I can bring up the right chart here, yeah, this is one of them. It was either MHO or the other housing stock that we mentioned in the daily alert last week, as it was reporting very big numbers, very big beat on both the top and bottom line, and it had a really nice long-term chart leading into it. And we're seeing more of these that are, sort of holding these levels, higher levels, and then breaking out later and continuing to move higher. So we may see that on D.R. Horton in the days ahead. And a lot of these housing-related stocks are actually doing really well. After earnings reports, like today, we saw Trex, which is not a home builder, but related in the housing industry and related to it. And we saw that hit the entry point that we like out of these earnings gaps, and then make a real nice initial move, pull back, and then continue higher. So this is really good action that we're seeing continuously in certain industries on these earnings gaps, and we've seen a few of them that about met the requirements in the earnings eruptions course. Here we have MEDP. We took a nice profit on that today. That nearly met all the requirements, although we want to see more pre-market volume in this, but we went ahead and jumped in anyways, and it turned out real nice. And it too is holding up really well for being this close to the Fed decision, and there's a good possibility they may disappoint to the upside, or to the downside, I should say. And being early August, like I said, you normally see pullback in the overall market. Yeah, so it'll be interesting how things go over the next 2-3 weeks. Usually you get a few really good earnings beats, and then earnings flags after that. And so, there's other stocks out here. I'm just going to pull up one of them, but there's better ones than this. I don't have time to go through all of them, but Netgear is, it's a pretty nice earnings flag, but it has this sort of long-term downtrend it's breaking out of. But that being said, it's starting to really hold these levels above the 200-day moving average, and it may break out of here after a really good report. And let me see, FCN is another one that really had a big earnings beat, and it's holding a nice flag through here. Actually broke out of the first earnings flag, and it's already starting to move up a little bit. And after the Fed tomorrow, if that's more bullish commentary, and they drop rates a quarter point or even a half point, and they talk about more cuts in the months ahead, that could be bullish for the market, and we could see at least a temporary follow through to the upside, and this could help that could help move this a little bit higher. But look for those earnings flags to develop, and early to mid August or so they start breaking out. And what we like to do is look at the very best earnings beats and long-term charts on top growth stocks, and those are the ones that we'll be focusing on most. And like I said, those housing stocks and housing-related stocks are doing really well so far out of these earnings gaps. So that's about it. Just want to give you an update and a little bit of market analysis. Check out our blog. And also, we have a 3-week free trial on the site for our daily alert. And we have a lot of these, good earnings gaps in the alert that we mentioned, and also really good long-term swing trading opportunities in there. So check that out, and best of luck in your trading, and we'll talk to you again real soon.